is pretty long. Is fear creeping into the market? Question mark. CNN Fear and Greed Index explained. Okay, so I'll be explaining to you what I'm seeing now, right now on the Fear and Greed Index to the last part before we go to the charts. And I think that you should be very careful because I feel that my forecast said already, likely itself, right? We might see some profit taking today, tomorrow, before coming Wednesday. And that will be the time whereby Jerome Powell and friends will be coming out and see and share what they feel will be happening, what do they think they want to do with their current tapering process, yeah? And also the federal block chart, okay? All this information will be out later. Just give me a moment there, guys. Okay, I'm back. Okay, so let's see what I have to offer later today. But you can see from my picture itself, you can see that with the Bitcoin rack, we have the Jerome Powell in the middle, meaning that he's still the limelight. We have the Omicron, and of course, the inflation is really going up fast in many parts of the world. Okay, we'll talk about this shortly. Now, disclaimer apply as usual. We are here to give you the market calls and views on the market. You make your final decision, yeah? You make your own final decision. Thank you. Now, mainstream media, what is their main role? Make noise. That is the main thing. Mainstream media, their main job is to make as much noise as possible to cover the track of the big boys. I already tell you that from day one, and it's never been anything lesser than that. Now, the thing is, you must understand the mainstream media itself, all the bosses who the real bosses behind them, you must check them and you will know that actually all belongs to a group of people. So whatever they try to explain to you will be always the direction that they want you to hit towards. And that's the reason why we need to look at the news and be very objective with what you read. If you just take on the surface value of what they say, then sometimes you may find it very, very difficult to make money from the market. Now, last week itself, right, kind of like I was expecting the market to pull back a little bit, but the market didn't do that because why? It was coming off and, you know, a friend of mine was asking me this question. Sorry, yeah? Having your writing notes at the moment right now. But don't worry, I took my test. It's all okay. Okay. Now, the thing is this. A friend of mine called me on Friday in the afternoon, asked me, Cal, is there any surefire method to make money from the market today? So I told him this, look, if you can wake up at 4 a.m. on Friday, 4 a.m. means Saturday early morning at 4 a.m. you wake up, and then if the Dow is recovering, you can buy the Dow Jones. Then he was asking me, why is that so? Because I said that this is a Friday thingy. Almost every Friday, almost, not every Friday, yeah, but almost every Friday, the US market will do a repeated thing, which is the last hour, the last half an hour, they will buy up the market. Yeah, almost every Friday. So what we saw was the same thing. On Friday itself, last Friday, the Dow Jones was actually down to negative level. Suddenly, they just pump it up all the way and close it high. Now, of course, now we have a follow-through buying as this morning in Asia, but is that on purpose? And I can tell you this is definitely on purpose, yeah? So yes, on last Friday, I was only like right for one particular call, and I said S&P, if it can actually maintain its upside, it should be able to go to 47.01. And of course, if the market goes there, yes, the market actually went there, 47.01 on Friday itself, all right? And that was only one call, because the rest itself, right, wasn't really, they didn't really manifest, meaning that it was pretty sideways, so nothing much to shout about. So, nothing much to say, all right? So that was what happened on Friday. Now, this week itself, right, we have a lot of data. Of course, we have the PPI data on this coming Tuesday, which is tomorrow. All right, they are looking at 0.6%, and previously was also around there, so I don't think there'll be any change on this. But the core retail sales is interesting. Look at the number. They are actually looking at a lower number. I mean, this is quite surprising. Okay, they are looking at a lower number. Now, the previous was 1.7. This time around, they're looking at only 1%. Okay, so the thing is this, of course, if the number come out weaker than expected itself, right, then the market will do a bit of profit taking. But when a market actually, when they purposely drive the numbers so low, right? I always believe in this. Maybe if it just do a 1.1%, maybe the market will just shoot up. Okay, so that is one why I could put my question mark on this particular target lah. Okay, but the main thing is of course on Thursday, it's going to be very important because it's Thursday in the early morning, whereby FOMC projection, okay, the statement, everything, whether it'll be rate high and all those things will be coming up at 3 a.m. Yeah, 3 a.m. Okay, so watch out for all these data. Okay, at 3 a.m. Then of course on Thursday we have the initial jobless claim. So when will we do our this guess the figure game? Right, we'll do it again here during this Thursday initial jobless claim. Yeah, okay, we'll do that. Okay, so that is what we need to share about for all this week's economic data and calendar. Now look at the Dow Jones, you can see that, right? Okay, the Dow Jones came down and then exactly at 3 a.m. or 4 a.m. at the time, look at the way the Dow rapidly went up itself. Okay, so that is what actually happened when the market is in this type of manipulated period. Yeah. So what happened? The S&P 500 rises to record close from Friday despite inflation fears. Now we all saw the incredible inflation figure on Friday, but what the market did, the market said that, okay, you know what, it's high, it's the highest, but you know what, it's lower than we expected, so let's buy. Okay, so that was what exactly happened on Friday, and that caused the market to actually recover and go even higher. So let's take a look. So despite inflation is hitting a 39-year high, the market doesn't care because why? Everything is good. To them itself, right? Since the consumer price index is going up, that means that overall the economy is doing well. This is really a very incredible way of reading this, because the reason why the consumer price index goes up, because the price itself goes up, the cost goes up, but the market focus on, because of that, the economy is doing well. So we see when the market decides to focus on something that is not normal, that's what happened. So, and because a lot of people was expecting at least 7%, and because it didn't come out as 7%, it only came out as 6.8. So the market said, okay, not to worry, 7% then we worry. So you think about this. Previously, they say 5% they worry, then they say never mind. Then they say 6% they worry, then never mind. Now 7%. So apparently this is why. And now people say it's a good thing, actually. That means that the market is doing well. The market has priced it in. So now the question is, can this sustain? All right. But of course, some people argue that this could be the end, because some people say that since the number is not higher than expected, hence, therefore, it could be a sign that the inflation is actually peaking. Now, I totally disagree on that, because we have the crude oil price at $83, $85 coming down to $62. But recently, from $62, it went back to $74. So in my opinion, it did not peak, but in fact, there's going to be a room for it to go even higher. So because of that as well, right, do note, the moment, if they're going to be a faster than not tapering, I'm going to believe in this. You see, now, yes, indeed, the argument is saying that, right, because there are money in the market. The credit is easy. So people are buying and buying and buying. That created the price to go higher. So that's why inflation is coming in. So let's say now if we pull the plug, we do the taper, and so naturally it's lesser buying, and then of course inflation will drop. Well, the argument is not wrong, but I felt that, right, imagine if let's say that I'm used to spending a lot of money, and suddenly itself, right, I don't have the money to spend. Will I reduce my spending? Well, I will, but the thing is this: does it mean that the cost will stay low? I don't think so, because you see, the reason why the cost is increasing now is not the buying power. It's that because the supply chain issue. It's because of the material issue, the resources issue. And that's why a lot of EVs are not able to produce cars right now, because there's not enough chips. So seriously, I don't buy that. It's because of the, if I do tapering, it will actually it will bring the inflation down. I feel that, right, it will bring it even higher because the demand for it will increase and people may not able to supply. So that is my point of what I'm saying right now. But of course, this argument itself, if I will tell the mainstream media, it will not be accepted. So anyway, I'm sharing right now on this current MAO. All right. So in fact, if anybody got any views on this itself, please kindly write it down and we can discuss on this together. Now, what happened on Friday? Well, it's very clear. We have a doji directional day. So we know that it's a doji directional day. That means that the market will close either at a high or at a low. And of course, with the KSI that's green in color, and the market stays above OP of the day. So naturally, and an MLP was triggered in the morning. Everything looks good. And when the market breaks above the pivot 1, which is 35,873, of course, naturally, the Dow Jones will go higher. So all these are really textbook answer. And that's the reason why on Friday, after the Dow stays above the pivot 1, I kept calling for buying in the respective group itself. Yeah. So let's see the Dow Jones on the intraday chart. Now, intraday chart, the market ding dong around the MLP. That's what happened, right? But once the market had focused itself, can you see the BNB over here? Yep, the BNB came in. And there's a color changeover from red to green. That means the buyers that came in. And first stop, it went up all the way to pivot 1. Then after that, it started to play around at pivot. Then again, during the data, it shoot up all the way. Yeah. Okay. But once it hit the high, you notice that the star on top right, because this is a BNB and it's also the high of the day, and the star will appear. So of course, when you see a star, that means that you can consider to take some profit, because why? If the market goes down, you can see it went all the way down. And of course, the color changeover, flip the pivot downwards and bring all it down back to the opening price. But what's incredible is look at the MLP. The market hit the MLP, stop there, and then recover strongly once again. So all these tells you that, right, all the technical point is so important. And as long as you're a trader, you will know what to do. And congratulations to those who make money from the Dow yesterday, sorry, Friday. Well done. Okay, so that's what happened to the Dow on Friday. Now, gold is very, very naughty. Yeah, indeed. Gold was having a CCYR color change on Thursday. So on Friday, it's supposed to go down. All right, so we shorted. So initially, it did go down because the KSI was red and then the blue bar were there. So there was some selling. But because the KSI was a downtick KSI red, right? So we were a bit careful. Then after that, when the market broke the previous day low, we thought that it would go lower. But surprisingly, it U-turned. And the moment it crossed back MLP, it went back all the way up itself. So let's just see the intraday and see what happened. Yeah. So this is what happened in intraday. Take a look, everybody. Now, the intraday shows that the market was just ding-donging around MLP. So it couldn't break MLP. Can you see that? It couldn't break MLP. MLP is a very, very powerful level to watch out for in the trading. And if the market failed to cross MLP, we do know that the market itself, right, could be actually going back down. Okay, just a few minutes. There's some messages coming in. So what happened is that once you can see the market couldn't break the MLP, it broke down and went down to below OP. But then there were so many KCX blinking at the bottom, and they were all waiting for one color change, and that is this one here itself, CCRY. So the color change came in, CCRY, and then there's a single rate over here that confirms it itself. Single rate means that the market most likely will bottom out soon, and the KSI turned green. And after that, when the blue bars went missing, all these alignment confirms the upside, and that's where they go shot up all the way to KTR +2 beautifully. Now, what is very incredible about this system is that all these numbers are all available on your screen the moment you start trading. So which means that when the market was on the way shooting up itself, right, how would the market know there's a KTR +2 existing in the market? KTR +2, I said about TWB student, no one would know this number. And of course, the market really goes there, stop there, and then come back down. You see, that is why I say this TWB system itself is really incredible. So guys, hopefully you make some money from the market. Congratulations if you've done that. Okay, good job. All right, so let's look at some local and global news right now, everybody. Yeah. Now the local news and okay, the global news is that Israeli study finds Pfizer COVID-19 booster protects against the Omicron. So the Israeli team says that, right, they work with the actual virus, and the company using this persona virus, they actually do a bioengineer to leave a hallmark of the mutation of the Omicron. And in short itself, right, they tested on it and they seem to find it pretty okay. The 3-shot course by Pfizer, right, the 2 vaccine and 1 booster shot, proved to be significantly able to protect against Omicron. So the thing is, Okay, this is exactly what biotech and Pfizer say themselves, right? So to me, it's that the originator tell you. So now, and someone on outside tell you the same thing. I mean, okay, all right. I mean, if it was Israeli researchers saying that first, then Pfizer came in to say that, yeah, confirm. I mean, it makes more sense. If the originator says that they are okay, and then you, third party, it's more like a double confirmation, yeah? So anyway, I'm not going to dispute on this. I'm just hope that it really do that well, because that's what a lot of people are banking on. But the thing is that at the same time itself, right, from this morning, Channel News Asia, our own one, says that, right, the Omicron virus spread faster and weakened the COVID-19 vaccine jab. So maybe that's why they need a booster, yeah? So this is what it says. It's much more transmissible than Delta strain and reduce vaccine efficiency, okay? But the thing is that currently now, right, this Omicron has spread to 63 countries. My point is that today is December, why would this Omicron spread so fast? This is something I don't really understand, yeah? Yeah, I mean, we know that it's a faster transmission, but seriously? So anyway, what's happening right now is that they're still saying the same thing, okay? Pfizer seems to already say that they're okay, their booster shot is good, so maybe we can just stick to that. So it causes mild illness or asymptomatic cases, but basically it's all right, no worry, yeah? So that's what's happening right now for this case. So of course, we talk about the inflation, 6.8%, highest ever since 1982. And of course, look at the weight, look at it, my God. Okay, so you can see that now, we compare to history and data, we are now at 6.8%, and this is definitely the highest. And the last time we see something even higher, that was back in 1983, 84, and we have a recession back then itself, okay? So the question is, we had a recession, but the smallest ever recession, the shortest recession ever. So now we are at high inflation, but we don't see the GDP numbers are going up. So all these things are spelling a bit of question mark in everywhere, yeah? So Federal Reserve is expected to speed up the end of bond buying, and of course they may even signal potential interest rate hike coming. Okay, so more and more people are speculating that, right, the market needs the tapering to be off so that inflation go up too fast. So some of them are saying that due to the bond market movement now, to put in context, if you go back in 1960s, the average hiking was about 400 basis points. So that means they're looking about 4%, okay, 4% hike. But again, all the way they said, whenever there's inflation, it doesn't mean that the market is going to be bad. So in fact, some of them are looking at, right, there'll be a 2-quarter point hike next year. Wow, okay. So imagine that just about 4 months ago, they're saying that the first hike is 2024. Suddenly it's now become 2023, and now everybody is pricing in 2022. So again, I repeat, to have interest rate hike is all right. Usual case is that they have to do the tapering first, zeroize it, then after that they do the interest rate hike. But of course, is there a possibility of an interest rate hike while they do tapering in between? It is possible depending on the situation, yeah? So that's why I got some important market news to share with you before we go to the charts, okay? Now, first of all, Jerome Powell is definitely the man of the hour again, as usual, because he has to make sure that he do it properly this time. Because it's the fourth time he's actually flip-flopping throughout. But of course, because of COVID, yeah, no choice, yeah? So now what happened, guys? Take a look. This is a very, very good chart that I get for you. Now, if you like this chart itself, right, please key the word like, L-I-K-E, because this chart basically summarizes the whole thing about what is the timeline that is expecting from now till 2022 end of the year. So if you like this chart I got for you, please key. Well, this chart came from where? This chart came from Goldman Sachs, okay? Goldman Sachs did this. And of course, I managed to get it from a YouTuber. See, I'm doing a lot of work, guys. Appreciate me. Okay, so now what's happening is that obviously we're looking at November, December, they are tapering at 15 billion. So logically speaking, they took another $15 billion soon next week, yeah? Next week, they take another 15 billion off the table, so which means that they're going to leave around about 90 billion per month. But then if let's say we believe that the next one will be 30 billion, that means that by January, we're going to see the remaining is only leaving, it's going to be only 60 billion. And of course, if they do another tapering, there will be left 30 billion. So by right itself, right, by March itself, we should be able to complete the entire $120 billion. That means that by right, January, February, March, we could actually see two things happening. One, the market gets so strong and recover on its own and go all the way up the south. That's one way. Two, the market just literally just keep on selling down. Yeah, so that's the thing here. So I believe that February will be a very, very important time to watch out, because by March, that is where the money is no longer there. And that is where the reality really kicks in. So I believe that February, March itself, will be a very important period for all of us as traders, because this could actually send the market into a crazy, crazy movement again. The last time we saw something like this was back in 2018, whereby the tapering was done, and of course the market didn't like it, and of course the market took profit, and the market was down by 15%. Yeah, if you cannot remember, let me just remind you with a chart here itself. Just give me a moment. Okay, let's bring in the charts. Now, this is what happened back in 2018. For those who are who forgot about it, it's all right. This is what happened. Nah. So that was what happened. The market was just basically buying and buying and buying and buying, and then after that there was the signal of tapering, and then after that the market from then on itself in October 2018, the market just went all the way down. Yeah. Went all the way down inside. And of course, the time that market moved down was almost 4,000 point movement. Yeah. So it was a very big wave down. Okay, it was a very big wave down. Of course, in the start of the year, because of there was already some mentioning of this, the market came down also about nearly 3,000 points. But you realize that it's always the same thing. Before the market actually do such an incredible sell-off, there will be one parabolic upside. Can you see that? It's always like this, a parabolic upside about 45 degrees angle. And then after that, we have the common point where the RSI hits 30, hits 70, there's another one. And then, more importantly, it's all right. You notice this, there will be a gap down effect. Can you see that? There's a gap down effect, yeah? So what am I saying that, right? If there's going to be any form of repeat, all these patterns must concur, yeah? All right, so what we have right now, so people have been asking me, would there be a market crash? Or will market sell off? Well, take a look, guys. Well, what we have right now is that do we have a parabolic recovery? Yes, we have. Okay, we do have that. Okay, we have that. And the thing is this, we're still quite away from, about a couple of percentage away from the all-time high. But and the RSI is nowhere near the 70 mark. That's one thing. But of course, the last time it did happen. Yeah, it did happen here. So is there a gap down? Well, I don't see any gap down except for this particular chart, but the market has already covered it. So all I can say is, okay, believe it or not, we may have to go this, then we have this sell off, okay? That's one way of looking at it. Another way is that if we do this, then like this. So what do you think, guys? What do you think? Will we see the red line or will we see the blue line? Can you key your answer right now? Do you think that we'll see the red line or we'll see the blue line? All right, let me see your answer, guys. Please key your answer right now. And let me see whether how many of you are in the blue camp and how many are on the red camp. All right, let's key your answer right now. No price for getting it correct. It's just to see what's the feel of it. Of course, if you have no views, you can just leave it alone, yeah? Okay. So what do you think, guys? Red or blue? Okay, we have some colors coming up. Okay, we have, we have more on the blue side. Chow Mei say red, Jerry red, Terry red, Bahir red. Yeah, we have more Terry red, yeah? Yeah, we have more people who are Toming red, okay? We have more people choosing the blue over the red. Of course, the last part, Danny's also red, yeah? Well, if you ask me for my personal view itself, I kind of believe that the answer, in my opinion, I believe the answer will be blue, yeah? My own answer. Now, my own answer will be blue. Because I felt that, right, the market will be doing the selling down first, and then after that recover, and then January should be a pretty good one before it come down to the February period. But of course, again, I can be totally wrong. We leave it to let the market decide, yeah? Okay, good sharing, guys. Thank you for your contribution. I appreciate that. Thank you very, very much. Okay. Now, I really like to have interaction with all you guys because end of the day, the only way that we can be happy is that we interact, we talk about it, and then we learn together. Okay. Yep. Thank you very much. Now, whether market is red or blue, I'm sure that we can make a lot of money from the market. That's more important. Yeah. Okay. So then after that, Goldman Sachs says that there will be two FOMC, that they will not do anything much likely. Then only in June, FOMC, then they suspect that there will be the first rate hike. Wow, this is from Goldman Sachs. Now, I put it this way, guys. Goldman Sachs is not just a small fry. It's the #1 US investment company. So if they were to say that they're going to look at a rate hike next year, I just cannot think how far-fetched can they be wrong. So in my opinion, it's all right. Most likely they will be right. And if they're going to be right, then the question mark is then, would that mean that the tapering have to start going on at a very fast speed? Of course it has. So if the market had to do that, right, then of course the market would not like it because the market now is really surviving on the money that this Jerome Powell and friends have been pumping into the market over the course of time. So that's the reason why, in my personal opinion itself, is that, right, this is something to take note, yeah? Now, I don't know whether they are able to predict the exact timing, but it's just a forecast by Goldman Sachs analysts. Okay? Oops. Hold on here. So stocks heading for their rare third straight year of double-digit gain. Just coming in, of course, now the Dow is up by 23%. Yeah, it's a very rare third straight year. So why is that so? Because there's so much money in the system, nothing to be. There's no shock. So Nat Davis research says that, right, stocks have done pretty well in the last 6 months ahead of the initial hype. So in general, that means that usually even as a rate hike, the market will do well because why? The market will buy in anticipation. And usually the financial stocks are the one going to perform. So that's the reason why most of the time itself, right, the time before the hike, the stock market still generally goes up. So now you understand why, even though there'll be a hike itself, right, the market will still likely be going up eventually. So you can see also that now, right, the NIKKEI manager equity exposure shows that, right, the current now, the investors' intelligence and the bullishness is still pretty high. Of course, there's some profit taking, but it's still overall okay. It's not at a time whereby there's some panic and the market's selling off and stuff like that. It's not really doing that right now, yeah? Now, of course, the Bitcoin mining has totally recovered from the Chinese ban. So, of course, we have the Chinese ban came in, but then everybody got shocked and stuff like that. But now, apparently, it's all good. So the Bitcoin market has recovered, and we have seen the Bitcoin from all the way from 30,000 went back to 67, 69,000, and more people are actually having their mining back again, resuming. So all these tells you what? That means that, right, that back then itself, all the doomsday and all the saying is all now redundant, yeah? So that's the reason why I keep on saying this, guys. Whenever the market pull back itself, right, in general term, it's a good time to buy into the market. But at the moment now, when the market telling you all is good, you just be very, very careful, okay? And the strategy says about this particular strategy says that, right, it has to be volatility expected for Bitcoin. So David Roach, okay, he's saying that, right, he's actually a market research and a global strategist at Morgan Stanley previously. All right, so he basically is not convinced that cryptocurrency is a viable investment now. He felt that, right, by and large, the market still got some room to go down further. But of course, longer term wise, all right, because of Bitcoin cryptocurrencies is getting involved with the governments, he felt that, right, the currency likely may double in about 10 years' time. So it's nowhere near to what people are saying within the next 2 years. So different people, different view. So I'm just going to share this with you. Now, my view is this. I'm still sticking to the ground that I believe that the market called Bitcoin will be trading lower this time itself. I still believe in that. I still believe that Bitcoin will be trading lower, okay? In another 2-3 weeks, then after that, we may see a bit of bottoming only when that happens. Yeah, just give me a moment. Like some messages coming as usual in again. Okay, all right, that's my view, yeah? Okay. Oh, sorry. All right, so the thing is this, you can see that the VIX market itself, right? The VIX, I say that between 1920 can buy, but VIX went lower. It went down to 18.6. Now, I think that this is a very good level to consider. Now, you can see that this 18.6, if you put a line across it, right, it has been a resistance support level quite evidently. You can see that pretty strongly over there. So I believe that at this point itself, right, you can try if you want to. If you don't want, you can wait for it to go lower to about maybe 15 again to back at a very good price. Now, to me, as I look at the RSI, when it's happened itself, right, usually it will bottom out around this area. So undeniable, this is not the lowest point, but it's the common point. So I kind of believe that, right, VIX will be going back up again. Now, VIX doesn't mean that the market crash, then it will go up. Market volatility, market going up and down could always bring the VIX higher. So to me now, it's at 18.6. I think we can try to buy some at 18.6 and then aim at the 24 to 26 level again. So this is again, the VIX, again another time whereby calling for VIX. But please do me a favor, if you're not comfortable to use AIMS and stuff like that, please use other broker to trade, okay? Now, VIX, of course, is used more for watching the market, but it's tradable, and there's people who trade it. So if you are not comfortable with that, just don't do it, okay? Only if you're comfortable, yeah? We are no longer kids. We should know what we are supposed to do. And of course, to protect your portfolio or do a hedge, or you want to basically make some speculative money from the market, I think that this VIX is a reasonable price. Now, if I ask you to buy at 34, 35, I mean, that is very bad of me, but I didn't. In fact, I told you take profit. Now the price come back down. I think it's a good price to buy. I have my reason for buying, and all the indicators are giving me the confirmation. So I don't see why we shouldn't give a try, okay? So you can see it's a very responsible way of trading and investing, and of course, guiding here itself, and not just, oh, market up already, let's buy, and this type of stuff. Now, when things go wrong, just sweep under the rug. I don't do that, and hopefully you don't do that too, okay? All right, so that is VIX. Now, this is where I want to drive in the concerning factor of the market right now. Now, this is the Fear and Greed Index by CNN. You go to CNN, Fear and Greed Index, you get to see this. Now, Friday, we saw Thursday, on Thursday, we saw the index at 33. Friday, we saw at 38 because the market recovered. So somehow the fear is no longer that much. And remember, when the fear was at 20, I called for buy. I repeated that, you're right. When the fear index was at 20, I called for buy. And of course, because of call for buy, that was the absolute bottom of the market. This was the point whereby, if you remember, when the market was coming down, the fear index itself was at 20. And that was where I say, guys, start to buy the market. And after that, the sell right from 20 now is at 36. And of course, the market has went up by almost 1,970 points, okay? So you can see that, right? It's pretty simple. You just have to use the fear index properly, okay? So this one you can remember, right? Yeah, okay, good. So if you remember, then now my personal concern is, take a look at everybody. Now this is the S&P, and this is the 7 components that make up the index, okay? So I took out a few selected ones, okay? S&P 500 and its 125-day moving average. Now look at it. The moving average is incredible. The last time we see something like this was in September, October recently, and then the market bottomed out, yeah? So now the S&P is 5.48% above the 125-day moving average. This is further than the average has been typical during last 2 years. And usually when that happens, is when the market distance is about more than 5%, you can see that, my friends, when it is more than 5%, the market will pull back. So now where we are almost also at 5%. So that means that if you are to be involved in this market right now, right, be careful, because usually the market will take some profit to go to the benchmark level. So that's why when you hit the benchmark, it stabilizes that, it goes up again. You got my point? Yeah. So this is where it's extremely greed right now because everybody is so into buying. Now the Michelin volume summation. Now this one measures the advancing and the decline volume on NYSE. And apparently last month, the figure is 0.1% more than the usual volume. And this is not normal because when you see that the sell, right, what happened? The market usually will take profit. When it happened in August, let's bring a chart right now, yeah? You can see that I'm putting a lot of effort to do all this for you guys because I'm a trader myself. I also want to prepare myself. Yeah, if you look at it, right, the last time we see something like this was in August. Can you see that? Okay, so in August, the market was shooting up, right, parabolic. Then of course this Machillan some volume summation basically came down, and that was where the market came down all the way. Then after that, the market rebounded. Then again, it happened again in September to October, and that was where the market hit a high and then came back down. Of course, the magnitude now was no longer near that. So the thing is this, now we have the same thing again. The market is going up, as you can see on the screen, right? If you look at it again, everybody, look at it. We have this long hammer here. Can you see that? Okay. Then do you see that we have something like this over here? And now we have another hammer right here, okay? Then of course, back then itself, we have the RSI reading was, for this case, was here. This one was somewhere here, and this guy was somewhere here. So these two are about the same. And of course, like I say, we have now the common points that we are here right now. So by right, we should see some profit taking in the near few days. Yeah. So that is the way I see the chart, yeah, from a very, very different perspective, okay? And of course, that's not the end yet. Let's take a look some more. We have this. Now, this is actually the net new 52 weeks high and low on NYSE, okay? Now, everybody take a look, please. Take a look. Just hold on here. Okay, take a look, yeah. Oh my goodness. Now, from early this year to all the way now, we are now even lower than 52 weeks high and low in NYSE. Now, this is actually extremity fear, right? The fear is actually at a very extreme level. And the last time at the fear, it was at 29 November. Okay, that was like 2 weeks ago. So now we are even lower than it. So this is not actually a very, very good sign in the general market. And of course, the last one is the CBOE 5 days average put and call ratio. Oh my goodness. Now it's actually up by 42.59%. So that means that a lot of people now are basically putting a lot of bet on the option market, and they are buying a lot of put. Okay, I repeat, they are buying a lot of put. So of course, people say this because they buy so much put, right? The boys won't let them win. So if the boys don't let them win, the market will go higher. So that is the argument that the bulls has. But of course, when we see this, let's just check a bit here and there. I want you all to take a look objectively, yeah, objectively. Okay, so we don't talk about the smaller one, not the bigger one. Okay, like this guy. I think this is the highest, right, among the rest. So this was happening in May period, whereby the put and call ratio was at the higher level. So look at it in May and May call. Yeah, take a look, guys. This is happening in mid-May. Yeah, mid-May is somewhere around here. That was on the 10 May here, and also the same thing happened. You can see that the market basically was shooting up, and then this was where the put call ratio was at a high level. You see that right now? And then, of course, the market reversed, gap down, and then the sell-off. This sell-off wasn't very big, like 1,000 points, but at least this one proved evidently that it seems to repeat. So now where we are even higher than the last time. So that's why I expressed my deep concern these 2 days itself. Yeah, traders can understand where am I coming from. Now you see, I don't just going to bring you RSI, stochastic, Bollinger Band, all this. I bring you really legitimate, very powerful stuff that I have gathered for you, and I didn't copy from anywhere. These are all my own little research. So you like it this right? Please show me that you like it by giving me all the love and like and care from the emoticons. Okay, that's what I need from you, right? If you think that I've done a pretty decent job, please give me all the likes and love. That will be the best way for me to, screenshot this, and then of course I can use it for marketing. Yeah. Guys, if you think that I did a pretty good job, just send out all the love, care, and likes, okay? That will be the best thing to do. Thank you very much, okay? So this is what we are doing right now, and hopefully you guys will benefit from this. Okay, so now let's go to the charts right now. The bull goes moo, the bear goes grr, and the lemming goes, it is different this time, yeah? Okay. Okay, first of all, I told you China market will go to 16,600. Remember, I was very, very clear. I said that the Chinese stock market will be going up, and the figure I say is 16,600. Do you remember that I said that? If you remember, please key the word China A50 spot on. Yeah, because I was very clear. I said that because when the market broke the MA30, that was the first reason I called for it. The second reason I said when the market break the MA200, that's it, it will go. I gave two figures, 16,400, but I said that likely it will see 16,600 if the market continue. And it all happened already. It has all happened. And the market now has came up, hit my chocolate bar right here beautifully, and now seemingly is taking profit. Now, everybody, this is very important. Hear me out, okay? Now, hear me out. It's very important. Now, look at it. This is the long-term chart of the entire China A50. Yeah, I'm going to take out some of the more not so important lines to maintain my view on this market. Okay, so now you can see three key points here I want to share with you. Number one, this is point A. This is point B, and this is point C, yeah? So the market basically hit point C, broke above it, got resisted by the MA 200, came down all the way, but incredibly stopped here at point C1. That is a very interesting reversal. And then after that, the market bottom up. We have a triple bottom here. And then the market broke the MA 200, and that's why the market goes up, okay? So that is the first thing to watch out for. Now you look carefully at point A, point B, and point C. You have the RSI that is at 65. But of course, now the RSI is even higher. It's even higher. And of course, if we look at it as compare notes itself, right, this is now where we are at point E. Okay, now, if we compare high of RSI, high to high, you compare A to E, okay? A to E you compare because there are two of them at RSI above 70. But yet E is much, much lower than A, yeah? E is much lower than A. So which means that, in my opinion, there should be some profit taking soon. I believe that this will bring back the China A50 down to about 16,050 level in the near term, 16,050. But once the market stabilizes at 16,050 and start to go up again, right? I believe China market could be going up to all the way up itself to 17,000 level. Okay, so that's why I felt that, right, the Chinese market might already have bottom up, but the thing is that I believe there'll be some profit taking soon. And once it's done, 16,050 will be a level to watch out. Okay, it will be a level to watch out. Yeah, very, very important level. Thank you very much for those who gave me the China spot on, because I was very clear that I mentioned that the market will be doing that, and I'm pretty all right with this call here as well. Okay. Yeah. Okay. So got it. Okay. So now take profit first will be my advice. Let it pull back down, and then we will observe this again. Yeah. Take profit. Yeah. Okay. Now, Hong Kong this morning was very simple to trade. Hong Kong this morning was not difficult at all. Hong Kong, first thing first. Hong Kong this morning, when the market opened, right, its opening price is already above pivot 1. So can you tell me, guys, those online right now, my students, yeah? When the market opens above pivot 1, what should you do? All right, can anyone tell me when the market opens above pivot 1 and once it trades above OP, right, what do you do? Please key your answer right now. I'll take some water break. Yep, thank you, Edmund. The only thing is to buy. Because it's above OP, above pivot 1, you have only one thing to do, CCRY, red to yellow, just buy. Don't care, don't bother. The only thing is to bother is because the KSI was red in color and uptick. That means that the selling is there. So if the market is climbing up itself, right, do take profit once it hit the KTR plus 2 or KTR plus 3. That's what you do. You don't call me Chong Ming. You know what to do, yeah? Okay, you don't need to call me. So I repeat, once the market stays over OP, CCRY and the 5-minute chart, just buy. But once it hit the KTR plus 2 or plus 3, be careful, that will be profit taking. And I can tell you this before the market even move. This is this is like a textbook answer that we see on a very regular basis. So let's see what happened in the real world itself today. Look at it. Beautiful, guys. Look at it. This is amazing. First of all, above OP, you must buy. Yes, above OP, you buy. Okay, so the price go down all the way. Yay. Then, incredibly, it hit the KTR plus 2, couldn't stay up for too long, come back down all the way. So can you see that now, guys? So now you understand why itself the KSI is so important, because it gives you a level or an idea that there will be profit taking between the KTR plus 2 to KTR plus 3. So whenever you see day chart KSI uptick, but the market goes up, that is the best bet. I always look for this. That's why I basically tell friends of mine to short the market because of this reason. Yeah, because the morning buyout was so fast, it was no point to chase. So we can do the opposite. Isn't that true? Yeah. So congratulations for those who actually did that. Okay, so now for Hang Seng itself, right, what can we expect for today? Now, if Hang Seng stays above OP, generally speaking, the market is still be going up. Now, there's a MA30 that's blocking now. It's at 24,259. Now, this level is blocking the market a little bit, so that is causing a bit of resistance here. But if the market stays up above this number, the next figure it could be going will be as high as 24,452. Okay, 24,452. Yeah, that is if let's say the market breaks above the MA30. Now, of course, if the market, because the KSI is red, and let's say there's some selling pressure from Europe later, then there's a danger. Because why? This is DJDD. Now, DJDD means that the market should stay at the high or stay at the low. So the thing is that this morning when the market was going up, I thought it would stay at the high. But of course, when the market hit the KTR plus 2 and pull back, something changes it in between. So now the question mark is, can it stay up? If it doesn't stay up, and then this is going to be dangerous. If any time, if the market breaks below the pivot 1, that's 24,105. If the market really breaks below 24,105, things can get very, very drastic. Yeah, so traders must be very careful. The market must stay above OP first. The OP of the day is 24,196. So the market has to stay above this figure. Yeah. If not, the market will easily go down all the way to pivot 1. Okay. That is what we are looking now for the Hang Seng market. Being very objective here with the technical analysis. Now, Dow Jones continue to run higher. You can see that it basically continue to go up higher. KSI in this case is green. So it's very good, uptick some more. So that means the market will go higher. And truth be told, once the market opened, it went all the way up to pivot 1. And that's where it got stopped. Now, the opening price is 36,031. So not too sure what causes it to stop, but the market stopped it. And then now we have to wait for a while. So only if the market can cross past the 36,146, then it will be able to go up all the way to 36,270 level. Yeah. So traders, watch out for that. Now, my personal view is that it's seemingly resisted by the pivot, and pivot, as you know, is a form of like a resistance on the way up. So if you look at the chart right now, 1 minute, 15-minute chart, you will see that there's a very clear resistance at that particular level. And again, this is scary because when the market open, right, no one will know any resistance, but the TWB system already calculated for you that there will be a resistance at 36,161. So what happened is that if a person who buy, they can aim all the way here because it happened to coincide with one of the KCB. But what is crazy is that once it hit down there, you notice the market just couldn't stay up already. Once the market basically hit the pivot 1, it just stay there and doesn't seem to be able to go any higher. And of course, there's some form of resistance now at the moment. And if this is going to turn south, the OP will be the first support that you can watch. If the market really breaks below the support level, then it will be coming down to MLP rather easily. and that is 35,894 for the Dow Jones. But I don't think this happened today, so we just wait for a while. Yeah, let's see. All right, so this is Nasdaq. Now Nasdaq today is a CCRY on the Nasdaq. CCRY single rate. So actually, by saying this, once the Nasdaq cracks above 16,428, it should be able to go all the way up itself to 16,613. So by right, as long as the Nasdaq stays above OP, it will be a buy. And of course, you can see right now it is above OP, and now that's why it's a buy for the Nasdaq. So Nasdaq itself, right? Watch out for this. It should be going higher. It may go to 16,613. Okay, so that is the Nasdaq. Now, S&P 500 have just broken above the pivot one at 47.28. So likely it's going to challenge the high soon. The high is 47.47. The last one back in the November the 22nd. So there is a small possibility that the market may be challenging the new high here itself. And if you look carefully, the chart-wise, this is actually at a historical high. So there is a chance for the S&P to basically touch this high before coming off. Yeah, so traders who trade S&P, watch out for that. This figure itself, let's take a look. Okay, this high is 47.47. So let's put a line on there. All right, so normally traders, when they see this, they can purposely test the 47.47 before coming down again. Yeah, so that's what I'm seeing now for the S&P 500. Nikkei tries, it's a doji directional day. Nikkei today itself, right, open straight away is a buy already. KSI is also green uptick, that's why you can see it went up. But the thing is that it got resisted at the MA30 and the bit of resistance at MA200. So which means that the market now is trying to test water. Now, of course, today, if the Nikkei stays up, then of course, the market has the potential to go all the way up to here. And that seemingly will be the KCB level at 28,857, okay? All right, now we are 28,667, so 200 points away. So no need to be worried about, yeah? Okay, so that is the Nikkei. Now, of course, the Nikkei is heavily supported by the MLP at 28,573. So, of course, as long as it stays above 573, it's fine. If it doesn't stay, then, of course, there could be profit taking or there could be some act of craziness. The market may go back down to 28,573. Yeah, okay. So that is the S&P 500. Okay, something error here, one. Okay, so that is the Nikkei. Let's look at the DAX market. Now, DAX is not ready yet, but DAX actually came down initially. Then after that, I said DAX will recover. Indeed, it really happened. So DAX today should gap up a little bit, but there's a clutch of this MLP and the MAs are also nearby. So that means that the market itself, right, will likely be resisted, yeah? Of course, if the market can break up, then the unity will bring it all higher itself. So for me, for DAX, right, I still think that DAX should be heading a bit downwards, but then of course, midterm today, it should be able to go up first, then come down, yeah? That's my personal view for DAX. Okay, so we covered quite a few markets already. Let's look at the commodity side now for gold. I know that some of you are waiting for this, like Chongming, waiting for my analysis on gold. Okay, guys, this is going to be very important. Listen up. This is going to be very, very, very important. Now, if you look carefully, this is the gold cage. Okay, you can see the cage. Yeah, that is the cage. So the gold, the cage itself, right, as you can see, the RL has been resisting the market for the last 5 days. So which means that as long as the market stays above the RL, the gold price should be able to go all the way up to 1796, okay? So basically, that's why if the gold stays above OP, naturally it will go. And of course, the target I'm looking at is 1808 because that is the that is the target for the BNB extension, yeah, for BNB extension. Okay, so from the view of this as well, right, if the gold stays above 1796, it should be able to hit 1808 rather easily. Okay, so that is the upside view. The downside view is that the KSI is still red in color, the blue bars are still there, and the KSI is uptick, right? That means the selling forces is there. So for today, we do suspect that there is some profit taking, yeah? We should expect that also happening. But of course, if the some gold stays above the 1796, we should see the 1808 figure. Okay, so that is gold. I don't think the downside will be any more because it's a CCRY. Day chart is a buy, so I don't see any more downside for this market. Silver. Now, silver, as I mentioned to you, it will be sideways because gold is not moving. Silver will not be moving. Now, silver has been sideways for 1, 2, 3, 4, 5, 6, 7, 8. For 8 days already, silver has been pretty sideways. So, but then silver, you do see that there is a KCX blinking at the bottom. In fact, it's blinking right now as I'm speaking here. So this KCX will be blinking for like the longest of time, but there's no CCRY yet. So I believe that the CCRY, once it comes out as well, right, should be able to bring the market higher. But my personal view is that it will happen. The CCRY happen, but the upside, right, may be kind of limited. It may be even more dangerous than not. So that's why I will say that for silver, as some gold is going to go up soon. Silver have a chance, so traders just need to stand by yourself. Yeah. For me, is that if silver breaks the 22, 29, yeah, I can buy some, just keep it over there. And you never know how much we appreciate in the coming future. Yeah, for this silver. All right, so that's silver for you. And how about Bitcoin? Now, do note, guys, that Bitcoin, the AIMS portal has changed to WL. If you're using the old Bitcoin symbol, you will not have any numbers coming out. So please do WL. And it's WL means it's ECN spread. And if it's ECN spread, that means that you can see the spread itself is very, very tight. It's like about $2 to $3 for Bitcoin. And that's incredible. $2 to $3 for Bitcoin is really incredible. And of course, that means that you can also trade weekend. So I repeat, Saturday, Sunday, you guys can trade the Bitcoin already. As long as you have the WL indicator, right? You can actually trade the Bitcoin or Ethereum on this during the weekend. So you have more time you can trade. For those who love to trade this weekend itself, will be again still all the way trading week for you. Okay. Now for me, Bitcoin is simply the same thing. I believe that Bitcoin is going to come down. I've not changed. All right, now I can see we are hybrid here because they couldn't have time to transmit. So let's just do the flip over of time frame. Okay, so why am I bearish on this Bitcoin? Because first of all, it's been red and it's contained by the KHRL. Can you see that? Very strongly containing it. And it tries to break out from the KH support level to about three days ago. Yeah, but now the thing is this, the KSI is still red, the blue bars are still there. And overall itself, right, the market should still be able to come down to around here. I think that it will be coming down to about 46,900 level. Yeah, that is what I'm seeing right now. But of course, if you can go down lower, that's I might prefer because it's a BNB over here, and that is 43,000. Okay, 429. Okay. So I believe that Bitcoin should be going now to 43,429 level. Oh yeah, I missed out crude there. Apology on that. I'll do that. Okay, so that's Bitcoin. Now we know that Binance Singapore is going to close its functionality by February on latest news. Yeah. Now Ethereum. Oops. Okay, you can see on your screen right now, right? Immediately it's not able to support because I didn't use the right symbol. Yeah, that's why I say not supported. I need to put the right symbol in. Here we go. Now Ethereum is now at 4,000 and below 4,000 right now. And I told you Ethereum cannot chase after it, right? Now Ethereum this morning is 4,200. And I told you guys Ethereum will go down. Now there is this very artificial support at Ethereum at about 3980 level. But this time around, notice there's a double KCB here itself. So now, like a magnet, is pulling down all the way now to 39, 80 plus. Okay, it's hanging around there. I still think that it will go down because when the market keep on getting supported, right, usually it will crack. And I believe that it's going to crack down all the way down here, and that's 36.60. That's a BMB minus 1x1. And interestingly, it's very near to the MA 200, which is 36.80. So that's why I believe that there's a good chance for Ethereum to go down all the way to 36.60 to 36.80. Then maybe we could see a bottom out for Bitcoin for this month itself. Yeah. So traders, just take note of that. This could actually be the one that we're looking for. Okay. Yes, indeed. Let's do crude oil before we wrap it up. Thank you, and Jerry, for noticing that. Yeah, I was just thinking what did I miss out. Now, crude oil is a single rate, as you can see, very clear, and it's moving up right now, and it's above the pivot 172.10. So I believe that as long as price is doing well, okay, this crude oil should be able to go back up again to $76. Yeah, $76.10 will be the target for crude oil. Because crude oil now we have a very strong MA30, MA200 all stacked together. So once the market breaks $73, it should be able to send crude oil all the way to 76.10 itself. Now, will that actually affect the stock market? Yes and no. Yes, it's because usually when crude oil price goes up, the stock market goes up. No, it's because now if the crude oil goes up, the inflation creeps higher, then the market will be more worried. So it all depends on how you can see it from the market. But for us itself, right, I still think that crude oil should be going higher because my KSI is green and everything looks good itself. Okay, so that will be all for today. I hope you enjoy the session. And I said to you guys before that I strongly believe that there could be some profit taking later today and tomorrow. So we don't need to go in so soon, so early. Let the market take a breather, and then we can buy back cheap again when it pull back. Yeah. Okay. That will be all for today. Thank you very much. Appreciate that, your time and your time staying online with me. This is Cal signing off. Okay, thank you guys. Bye.